This is Tampa Home Talk, and I'm your host, Katrina Madewell. And today we have a special guest in the studio, Mr. Bob Enriquez. Hillsborough County property appraiser is my guest for the day. Hey, thanks for joining me today, Bob.
Katrina, it's a real pleasure to be here.
We are going to talk a lot over the next coming months ahead. All the stuff that's in the news, you've probably seen it or heard it somewhere. Even if you don't watch the news, I'm sure you've seen it on social media. Ron DeSantis's plan it started out eliminate property taxes, right? That was the big thing. And we're going to talk about that.
Yeah.
It's not so much an elimination of property tax. And before we jump into this, first of all, let's just talk about the difference between the property appraiser and the tax collector, because you guys are different.
Yes.
And then I would love to share just some stories with boots on the ground on how we got here. And then we'll jump into some of the proposed.
Sure, absolutely.
taxes.
Well, there's a lot of misconceptions. It's probably just as important to know what we don't do in the property appraiser's office versus what we do.
Yes.
And the tax collector is sort of our sister agency. But literally, our constitutional charge, the property appraiser's office, and the other 66 property appraisers, my counterparts throughout the state, is to assess the value of all the land in Hillsborough County, in my case, about 570,000 or so properties each year for property tax purposes, and then evaluate any exemptions that people may qualify for. And that literally is, in a nutshell, although obviously it's much more complicated than what our office does. The tax collector does exactly what the name says. It collects that's the office that actually collects taxes.
So in simple forms, right? Nancy Milan's office is going to collect the tax that's
Right.
due, but your office is going to assess how much tax they should collect based on a value.
Well,
In a
no, we're
sense.
going to figure out the value.
Well, the value
and
of the
right, and then the taxing authorities, whether it be the county, the cities, or the various taxing authorities, they're going to set the millage rate tax rates based on their budgets each year. That's ultimately will end up being what would be your tax bill that will be collected by Nancy, in this case,
Yeah.
our tax collector.
So one little piece, one tidbit I'm going to give you before we move on and sort of just barrel through this. When you get that trim notice that
Notice
comes
of-
out, the blue
Notice of
one,
proposed
it
taxes.
says
Yeah.
it's not a bill, but
Right.
it's proposed taxes. Talk about why someone should pay attention to this and not just throw it in the trash.
No, really, everything that's sort of at the end of the day will go into the real estate portion of your property tax bill. And that's Katrina, that's an important distinction for folks to remember, is that there's a real estate portion of your property tax bill. And then there are all these other fees and taxes on top of that, whether you have a CDD or you have a special taxing district, you have
Stormwater, lights.
your garbage pickup, all of those things are added on top of it when you receive your final bill. But really, everything that goes into the real estate portion, in terms of how much your property's been assessed, what exemptions you may or may not have qualified for, and ultimately an estimate of what your property taxes will be, the real estate portion on your taxes are on that. And so that gives you an idea or a time, 25 days from the time that we mail those notice of proposed taxes, the trim notices, to question that, to possibly file a value adjustment board petition if
Right.
it's something you disagree.
So that's the big thing. Look at the value on that. Look at what it's being assessed for, right? We're in a time now where you're seeing changes being made to valuations of properties because the market is stabilizing itself and rebalancing out from the crazy couple years we had after COVID. And that's a normal part of real estate, right? Probably a lot more work for your office, but this is a normal part of real estate.
Yeah, each year based on the value as of January 1st, that's the magic date for us. That's we're literally historians from that standpoint. So on January 1st, so when you receive your notice of proposed taxes from your property appraiser, because I know this may go out to places outside of Hillsborough County in August, it's based on January 1st of 2026, what the value was at that point.
Right.
And as you say, the market has flattened or is
It's rebalancing.
It's rebalancing
Yeah.
itself. Versus the incredible increases we saw over the last 5 or 10 years. So, but that's important for folks to look and
Yeah.
see, because from time to time you may have applied for an exemption you thought you had, or an exemption was taken off you didn't know, or there may be a question about why it's gone up or not. And so that's an important time for us. And we want folks. We're not in the revenue business. We want to make sure that we're getting things right. We want folks to contact us, question it, so we can answer those questions. And if they feel like they need to file a value adjustment board petition, we continue to work with people. So the vast majority of those petitions are withdrawn before they go through the whole process.
We could probably talk about that on another whole
Oh,
show just by
absolutely.
itself, what
Yeah.
that even means and what that looks like.
Yeah.
So this is a perfect segue into the topic of conversation, which we're having for this show. And I'll just share the story, right? So how did we get here, right? So the big stuff that DeSantis is putting on the ballot this year for voters to vote.
But legislature put on the ballot based on an idea that he had. Yeah.
Right, correct. Based on an idea. So how this happened, and I'll just giving you some boots on the ground sort of examples, right? And we have a lot of great things here in Florida in terms of like homestead exemption, the Save Our Homes, the cap, the portability, which we've talked about in a multitude of other shows. But these are great benefits that Florida homeowners on primary residence have.
Right.
Where we get into challenges is in a market like we had over the last couple years after COVID. So I'd say 2021 to 2023 was when things got crazy because the rates were crazy low, slowly increased up, which that should have happened long before it did.
And that migration.
Yeah, it would have slowed down this inflation train, but that happened. You know, the work from home, there was a lot of layers there that caused a huge demand in Florida, right? Some of that's even political. It is what it is. That's why we had a lot of drive here to the state of Florida and to our local areas here in Tampa Bay. The problem lies because property taxes are paid in arrears. So as you said, January 1st, you guys are assessing the property. Whoever lived in at that time, was there any prior transfers? And the values have changed so much. So if someone's lived in their home for 20 years, now you're going to have a very big adjustment to the new owner. So while the prior owner was protected under all the great legislation and rules and laws that we have, that their taxes can only go up so much. They can take that tax savings with them. All of those things I support as a real estate pro and a homeowner advocate. The problem is I'm looking at some of these young families, and while I understand it and I explain it, I can tell you there's many real estate professionals that do not. Either they don't understand it, don't explain it, don't want to explain it, whatever the situation is. And you get someone where this property is owned for 20 years.
It's the reset.
Correct. Now it's changed hands. Now you're resetting. And so looking at it from a very black and white perspective, which we know this is not how it is, right? We understand how it works. But from a black and white perspective, the taxes were $1,500, $2,000. This person has bought for fair market value. And in Tampa Bay, that number is around $400,000. That's our median or average home price. So that prior person might have been assessed on 100, 150,000, and now they're going to get reassessed in the threes, right? If they bought a $400,000 property. Now your taxes, and again, the millage is different depending whether it's city and county and all of these things. From a basic black and white perspective, you're looking at somebody that owned their property that had a tax bill of $1,500, $2,000. Now the next year, which and oftentimes this can be a year and a half, like a little bit later than it feels like so long ago you bought this property. Now these property taxes are double, triple, sometimes quadruple. I know you've seen it.
Sure.
I know the tax collector's office have seen it. They get the screaming, raging calls. And that's simply where it has adjusted. And there's been some changes to this proposed amendment, and we're going to talk about it. And I think the changes are good. And I'll share just a couple of things before we dive into that. But that's the underlying problem is I look at these young families and I think, okay, no one's property taxes should ever double, triple, quadruple. It just shouldn't happen, right? From the young families on the other end of it, that's what we're trying to fix from a
and I think, well, and so there's the property tax system in Florida, based on the fact that we created Save Our Homes through constitutional amendment any number of years ago, as property values started to rise and people were, quote, being taxed out of their homes, because it used to be that your just or market value minus any exemptions you may qualify for was basically your tax bill. And so Save Our Homes came about. Save Our Homes had the unintended consequence of creating this inequity within the real estate market that you're speaking to, because basically, depending on how long you had this great tax shelter, depending on how long you were in the home, and frankly, you would have to stay in the home because originally we didn't have portability.
Right.
You didn't want to move. And so in theory, that new owners paying based on the actual value of the home minus any exemptions, like we used to be in the old days. So you can look at it one of two ways. You know, for the owners that have been there for a long time or are being rewarded for being longtime residents, but there is this inequity. And so I think that's something that we could have looked at the legislature. And I've spent 8 years in the legislature, so I kind of know how things work up there. I think there's ways that you could phase in the reset over the course of time and or create additional exemptions for new first-time home buyers for various things as well, versus what versus what we're going to talk about. But yes, that you're absolutely right. That's part of what what is going on here, we can't ignore the fact that there's also a political reality and a personal reality for each and every one of us is that there's an affordability crisis out there.
Correct. Yeah.
And so,
right.
And so, and we've had the crush of rising property insurance, as we know. Some things have happened in the market that's helped a bit, but this sort of is a way to answer affordability without talking about insurance, which the legislature doesn't really want to deal with.
It all food costs.
And frankly, when the governor threw this idea of doing away with all property taxes out there, he leveraged the legislature into feeling like they had to do something this year.
They did.
Yeah.
You and I understand this at a high level. We look at it and understand it differently than the general population because there's a lot of stuff that goes into this, right? Do I support the Save Our Homes and the portability? Absolutely. I think we should not get rid of that. There's a lot of aging people. Like you've been in Tampa for a long time.
Yeah, 5 generations.
Yeah. So like me, I was born and raised right here in Tampa. And so those things are important to people that have always lived here. We're not transplants from other areas. We don't want to run out our residents that have been 5-generation owners here. That's what that legislation was meant to protect, people like you and me. So, but a couple of things just to kind of piggyback on what you said, and then we'll get into the proposed. So I did a little bit of homework on this, and going back to the last time we had craziness in the market, right? When property values went nuts, that was before the housing collapse, right? So
the run up, we call it.
Correct. I was in real estate at that time. The peak of the market was December of 2006. And then the bottom of the market was somewhere around low 08, right? Before it was a very slow climb back up. And so when you look at this, there's some similarities to what happened at that time compared to what's just happened after COVID in terms of property values spiking. The difference is we're not going to crash because there's real money and buyers in the market. And that wasn't the case pre-06, right? Which is another whole story in itself we could do a different show on. But besides that, Florida, the homestead exemption at that time in 2008 was increased to $50,000 because the prices in that time were worth $220,000. Well, they dropped below that. It was in the hundreds even, but the median price when the homestead exemption went from $25,000 to $50,000 was $220,000, right? So you're looking at $220,000 versus $50,000. Today, the median home price in Tampa Bay is $400,000. So that's more than doubled from the last time we had a major increase. And the problem is the exemption didn't keep up with the increase, right? So this is the pendulum swinging that we're talking about. And so with that also came differences that, where revenue was collected. So between 2018 and 2025, Hillsborough County, for example, the tax collection increased 88%. And this is what I was talking to Mike Fasano about on another show.
Right.
I didn't have the numbers at that time, but I pulled them for this show and in the future. But 88% is how much the tax collection increased while the county population only increased 8%. So that's part of the problem, right? The property tax revenue grew 11 times faster than the population growth. Now in Pasco, those numbers are substantially larger because, again, bedroom community, people commuting, all of those things. But the thing about this is it's 61.2% of homestead properties would have had their property taxes eliminated under this $250,000 homestead exemption. So to simplify it, it's how much the property taxes have increased, and not that they haven't done things with it, because they have, right? There's bonds that build things, bridges, roads, schools, all the things, but they weren't equal. They weren't equal, right? It's like a prime example where the law couldn't keep up with the reality of the market, and now they're trying to fix that.
Yeah, it's complicated, and frankly, probably more complicated than you can do in a 2-day special session.
Right.
But that's the political reality of it. I think we really need to talk about, is it a spending issue at the local level or is it a property tax issue?
I think it's both.
Well, it probably is.
I think it's fair to say.
I think that there's, so if the spending is the issue, here's this, it's so much more complicated. I understand each of us individually. Listen, I'm ready to save a couple $1,000s myself, all of us are. But then we have to also realize that our spending at our own kitchen table at the end of the month is much higher than it was 10 years ago. Government operates differently, but the same to some extent. Insurance goes up, salaries go up. So that there's somewhere.
Those are big ones right there. Insurance go up, salaries grow up. The cost to build that bridge, right, which is built into this, is not
It's
before
gone up.
COVID.
All of that. There's certain fixed costs within government, retirements. There's a number of things that have gone up. So now, does it go up to the extent of the increase in spending that we're talking about? Well, that's something that we could look at. Realistically, though, here's what it comes down to. It's when people finally go to the polls and make a decision on this amendment, and we'll talk, I'm sure, more specifics of it. It's going to be your own individual interest versus what does it mean long term in terms of the way our system works, in terms of how we fund local government, to what extent we enjoy certain services that may not be available under this scenario.
So I think
or do we turn that over to the state to try to provide the funding to do those things?
Specifically talking about like police and fire and schools, or
well, yeah. So again, statistically, and again, numbers don't lie. But I had when I worked in the private sector one time, I worked with an old guy, an engineer. He used to tell me the numbers don't lie, but liars can make numbers.
the people do.
Right. And I'm not saying that anybody's lying in this situation, but certainly you can talk about numbers in a way that forms people's opinions. If you look at Hillsborough County's budget, overall budget, about 15% of it is property taxes. So you say, well, gosh, it's only 15%. But that's the overall budget with all the funding sources that a big county like Hillsborough County has. When you look at the actual operating budget, it's 60 to 70%. The vast majority of that is public safety. Those are core services. In this discussion and in this implementing bill, as well as the constitutional amendment, it talks about what core services are, that things like fire, police. So we understand that should be first. The first bite at the apple should be those things. The problem is, if you only have half an apple, it doesn't guarantee funding for those things. It only says that they will get considered first. And so this is a big number. And folks, I mean, right, wrong, or indifferent, we're talking about, when it's fully implemented at $250,000, about $500 million of lost revenue in 2028. Total, about 300 billion, or 300 million, 300 million in the first year in 2027. And we also have to understand how budgeting goes. This would be lost revenue going forward. So the Revenue Estimating Conference in Tallahassee just finally put a number on this effort and said it's somewhere in the neighborhood of $12 billion of lost revenue over the course of time. Now, it's interesting to me, having been in the legislature, that they did the Revenue Estimating Conference in Tallahassee gave them a number after they had already passed the constitutional amendment. I usually,
That's backwards.
Right. I mean, I'm sure the last time you bought a car, you wanted to ask how much it was worth, how much you're paying before you actually bought the car or drove away. So there's a lot going on here. And we're gonna hear both sides of this issue. It's a political football.
So a question for you, and I haven't looked at. I mean, I've looked at some of the things and I've got the highlights, but I know originally when DeSantis had brought this up, I think we definitely need an increase in the homestead exemption for sure. Like what we talked about, the numbers just don't balance. We need that based on the property values in general. That will fix some of it. Yes, there's going to be some lost revenue with that, which we have to figure out how to make up. Originally, DeSantis was talking about adding on like increasing what we collect in taxes on consumable items, right? Like if you go buy a TV or whatever to make up for those core services, is that being part of the proposed amendment?
No, and it's really the discussion's really silent on backfilling some or all of the lost revenue. And you're going to hear a lot of things out there about that there's all this waste, fraud, and abuse going on. And I think we found over the course of time that those numbers don't add up as far as actually that there's enough of that out there to make up for the difference. And frankly, I mean, if we can bring this down to our own individual level, people tend to these days, and it's not necessarily the right way. Old school, when my family, when I was growing up, you tried to put a little money aside each month and you saved for whatever. People don't save the way they used to.
They do not.
And so we kind of spend up to our income level, right? So, I've got
make more, spend more.
Right. I got a little bit extra. We're going to go on the vacation. I'm going to buy the nicer car. I'm going to, we've learned we're consumers. We've been taught to do that. So, so if I were to tell you, Katrina, at the end of this month, you're going to have 60% or 40% less income, but and you just have to make do, just make it work. Well, your bills are going to come in.
You got to make some cuts.
Yeah. And you're going to have to make some tough decisions, or you're going to lose your house, you're going to lose your car, you're going to lose something, right? So that's the unfortunate thing, is that we can argue that spending at the local level has outstripped, what it should be over the course of the last X number of years. Now, it's a bigger story than that. We know that a lot more people have moved here. We've had to we have to build infrastructure. We're having to spend more at the local, all those things that the local communities are going to tell you as this thing goes forward.
Well, this is Tampa Home Talk. I'm your host, Katrina Madewell. Our author number is 813-377-2775. If you've got some questions, you want perhaps Bob to answer them the next time, or a topic you would like us to cover, call or text 813-277-2775. We'll be glad to cover that in a future episode here on Tampa Home Talk. I'm your host, Katrina Madewell. Remember, love where you live, or we're going to fix it. Welcome home.